Let's talk about Gap, the brand you probably have in your closet. For decades, Gap has been a staple in American fashion, known for its classic jeans, cozy hoodies, and those iconic logo sweatshirts. Whether you shopped there as a teen or still pick up basics today, Gap has always been about accessible style for everyone. Now, there's some big news shaking up the retail world. Barclays, one of the world's leading banks, just upgraded Gap's stock from equal weight to overweight. That's a major vote of confidence from a financial powerhouse. What does that mean for Gap? In simple terms, Barclays believes Gap is poised to outperform most other stocks in the market. It's a strong signal that experts see real potential for growth and success ahead. But that's not all. Barclays also raised their price target for Gap from $19 to $30 a share. That's a massive leap, and it shows they're expecting big things from the company in the near future. Investors are taking notice, and the financial world is buzzing. This kind of upgrade doesn't happen every day, and it's a clear sign that confidence in Gap's future is growing fast. So, what's behind this sudden optimism? It all comes down to smart, disciplined leadership and a focused strategy that's finally starting to pay off. Gap's management has been making tough decisions, streamlining operations, and zeroing in on what customers really want. For years, Gap struggled with its identity, relying on constant sales and deep discounts just to get people in the door. The brand lost its way, and shoppers noticed. But now, things are changing for the better. Barclays isn't just betting on a quick turnaround. They believe Gap is on the path to long-term sustainable growth. This isn't about a temporary boost. It's about building a stronger, more resilient company for the future. The renewed focus is on reconnecting with customers, rebuilding trust, and making Gap relevant for a new generation. From updated styles to better in-store experiences, Gap is working hard to win back shoppers. This upgrade from Barclays is more than just a pat on the back. It's a sign that Gap is truly turning a corner and regaining its place in the spotlight. Investors are watching closely, analysts are talking, and the retail industry is paying attention. Gap's story is becoming one to watch again. The comeback story is just getting started, and if Barclays is right, Gap's best days might still be ahead. Stay tuned. Meet Richard Dickson, Gap's new CEO and the architect of this turnaround. He's known for reviving Barbie, and now he's bringing that magic to Gap. Dickson's strategy? Discipline and focus. No more chasing every trend. Each brand under Gap Inc. now has a clear identity and purpose. The goal? Create products people love, not just buy on sale. He's building excitement around full-price items, protecting the brand's value. Dickson's leadership is about long-term vision, not quick wins. Barclays credits him as the key driver behind Gap's momentum. He's not just managing a company, he's reviving an American icon. The team is united, the direction is clear, and the results are showing. Strong leadership is fueling this comeback. Gap's story is proof that the right leader can change everything. Under Dickson's leadership, Gap is laser-focused on what truly matters, delivering great clothes that people genuinely want to wear. The company is going back to its roots, but with a modern twist, making sure every decision centers around quality and customer satisfaction. They're perfecting the classics, jeans, hoodies, and tees, by investing in better fabrics, improved fits, and timeless designs. Every piece is crafted to feel just right, so customers can rely on Gap for wardrobe staples that last and look good season after season. The product is the star, but marketing is evolving too. Gap's team is using data-driven insights and creative storytelling to make sure their message stands out in a crowded marketplace. Instead of endless discounts, Gap now runs targeted campaigns that connect emotionally, especially with millennials and Gen Z. They're building real relationships with customers, using social media and digital platforms to spark conversations and foster loyalty. Campaigns like Better in Denim showcase what Gap does best, highlighting quality, fit, and style in a way that feels authentic and aspirational. The result? More people are choosing to buy at full price, seeing real value in what Gap offers. It's a shift from bargain hunting to brand appreciation, and it's paying off. Execution is tighter than ever. From the initial design phase to the moment clothes hit store shelves, every step is more efficient and intentional. Teams are collaborating closely to ensure nothing is left to chance. This renewed focus is rebuilding brand equity and reminding people why they fell in love with Gap in the first place. It's about rekindling that sense of trust and excitement. The focus is on fundamentals, not gimmicks. Gap is doubling down on what it does best, delivering simple, stylish essentials that never go out of fashion. Gap is making steady deposits into its reputation bank, building goodwill and trust with every collection, rather than making risky withdrawals for short-term gains. The turnaround engine is running on 3 key fuels: quality, relevance, and smart marketing. Each one is essential to keeping the momentum going. It's not flashy or over the top, it's simply working. The results are steady, sustainable, and real. That's how you win in retail, by focusing on what matters, delivering value, and building a brand people are proud to wear. Let's zoom in on the Gap brand itself, the heart of the company. After years of struggle, Gap is making a real comeback. Barclays says Gap's flagship brand shows the most improvement. The secret? Rediscovering its identity, timeless, optimistic American style. Denim, khakis, and logo tees are back in focus, with better fit and quality. Campaigns like Better in Denim remind everyone of Gap's heritage. Younger shoppers, millennials and Gen Z, are connecting with the brand through social media and influencer partnerships. Full-price sales are up, showing customers see real value. Barclays' promo score for Gap is strong, reflecting disciplined pricing. The brand is bridging its iconic past with a vibrant future. The comeback is real, and it's just beginning. Gap Inc. isn't just Gap, it's Old Navy and Banana Republic too. Old Navy is refocusing on fun, affordable family fashion and improving its product lineup. Seasonal favorites and trendy pieces are back, driving steady growth. While promotions are still common, product and targeting improvements are setting up healthier performance. Banana Republic is repositioning as a premium, lifestyle brand. Think cashmere, leather, and timeless designs. The shift is attracting customers willing to invest in quality. Both brands are clarifying their identities and product assortments. The strategy isn't one size fits all. Each brand gets a tailored plan. Improvements across all 3 brands show leadership's approach is working. Gap Inc. is building a stronger, more sustainable company. Every brand is finding its groove. Better clothes and marketing are great, but is Gap making more money? Yes. And here's why. Gap is selling more at full price, boosting gross margins. Less discounting means more profit per item. Savings and profits are reinvested into product innovation and marketing, creating a virtuous cycle. Inventory control is tighter, no more overflowing clearance racks. They're buying smarter, matching inventory to real demand. This reduces costly markdowns and keeps stores looking sharp. Barclays highlights inventory management as key to margin improvement. It's not glamorous, but it's critical for a healthy bottom line. Financial discipline is driving sustainable growth. Gap's business is getting stronger from the inside out. So what's the bottom line? Gap's financials are looking up. Barclays has raised earnings estimates for the next few years. Why? Accelerating sales and better margins. Product improvements and smart marketing are bringing customers back. Gap is regaining market share and stabilizing its business. Full-price selling keeps profits healthy as sales grow. Analysts see this as high-quality, sustainable growth. The turnaround isn't just a story, it's showing up in the numbers. Investors love the combination of rising sales and expanding margins. Gap's recovery is real, and the foundation is solid. Let's keep it real. There are still plenty of challenges ahead for Gap, and the road to recovery is anything but smooth. The retail landscape is constantly shifting, and every decision comes with its own set of risks and uncertainties. Tariffs remain a major headwind, with costs piling up and eating into profits. In fact, tariffs could cost Gap up to $175 million this year alone, putting significant pressure on the bottom line and forcing the company to rethink its global supply chain. That's a real hit to profits, but Gap isn't just sitting back. The company is actively working to offset these costs by adjusting where it sources products, negotiating with suppliers, and making tough decisions about pricing. Every dollar counts, and every move matters. Competition is fiercer than ever. Fast fashion giants, nimble online boutiques, and massive big-box retailers are all fighting for the same shoppers. The market is crowded, and consumers have more choices than ever before. To stand out, Gap must keep its products fresh, its marketing sharp, and its brand relevant. That means constantly innovating, staying ahead of trends, and making sure every campaign connects with customers. The temptation to join in on big sales and deep discounts is always there, but chasing short-term gains can undermine disciplined pricing and hurt long-term profitability. It's a delicate balance between attracting shoppers and protecting margins. Consumer confidence is another wild card. If the economy slows down or uncertainty rises, people tend to tighten their wallets and cut back on spending, especially on non-essential items like new clothes. Gap's success depends on convincing shoppers to choose them, even when times are tough. Building loyalty and trust is more important than ever, and every positive experience counts. Navigating these risks isn't easy. It takes strong leadership, a clear strategy, and the ability to adapt quickly when things change. Long-term success depends on making the right moves now, even when the future feels uncertain. Still, Barclays' recent upgrade shows that there's real confidence in Gap's ability to manage these challenges. Investors are watching closely, and the company's next steps will be critical. The strategy is strong, but execution will be tested at every turn. Success will depend on how well Gap can turn plans into action, and how quickly it can respond to new obstacles. The risks are real, but so is the progress. Every step forward is a sign that the comeback is possible, even if it's not guaranteed. The comeback isn't guaranteed, but with determination, smart strategy, and a bit of luck, Gap's turnaround is definitely on track. So, why is Barclays so bullish on Gap? They see a multi-year recovery, not just a short-term bump. The disciplined turnaround, brand elevation, and sustainable growth are winning over analysts. Richard Dickson's leadership is driving real change. Gap is gaining market share and reconnecting with customers. The $30 price target is a vote of confidence in the strategy and vision. Barclays believes Gap is transforming into a revitalized fashion powerhouse. It's an iconic American comeback story in the making. Reinvention is possible, with vision, leadership, and hard work. The best is yet to come for Gap, and we'll all be watching.